Rakesh, good evening. Okay. Yeah. So under internal control procedures, what do we have? Is physical controls over assets, authorizations and approvals, segregation of duties, management design of the controls, and effective operational controls. So basically, what are the objectives? Actually, internal audit, it is assessment of internal controls. So internal controls which is already there in place. In internal audit, these internal controls are assessed, and accordingly the management responsibility lies to ensure the compliance and conformity of internal controls as per the predetermined standards. So while we look at internal audit, okay, so internal control objectives, that is the better one because we have already seen internal audit. Yeah. So understanding the internal control review objectives. So once again, is there a problem with the screen that you are not able to see fully? It is showing up correctly. Yes, now it's fine. Okay. So while coming to internal control, there are three control objectives basically. One is operational, another one is reporting, and the third one is compliance. And operational objectives, we have already seen it. Like whatever needs to be there, a checkpoint needs to be there. That is what is operational objectives. When it comes to reporting, what do we do in reporting? So objectives pertaining to reliable, transparent and timely reporting of both financial and non-financial transactions. So whenever we think about reporting, it's just not the finance factors. We have even non-financial transactions. Like for example, password protections, review and approval, authorization of accesses. These are all non-financial in that respect. But reconciliation is financial in aspect. So that way, reporting objectives are both for financial and non-financial transactions. So this needs to be checked, like segregation of duties, performance reviews, and then compliance objectives is to abide by or to go by the state and federal laws and whatever industry regulations are applicable. Like for example, verification, if information is correctly captured, performance reviews, education and training, okay, there will be policies and procedure manuals that needs to be followed. So all these are compliances. So basically these are the three objectives for control. One is operational, second one is reporting, third one is compliance. So while we look at internal control, what is the audit objectives? Now we have seen what is internal control objectives, but when we go for internal control audit, auditing the same internal control system that is present, what are the things are required to be looked into? First, occurrence or existence. So there should be an existence of internal control. Completeness, accuracy, classification, cutoff or timing, and the last is reporting and summarization. So for example, like if we have, yeah, this is good. The control objective. The objective of the control is to verify that a misstatement was prevented or detected by a specific control activity. How this can be done? So what should be the control activity in place? It should manage authorization of expenditures. So the objective is to verify the misstatement or prevent a particular activity to happen. So how that can be controlled? That can be controlled like if there are authorizations for management of expenditures. So it's not like just like that you do an expenditure. There should be an approval and authorization process for the same. This will help us to achieve the control objective. So if we look at application of internal control audit objectives, where do we apply? First one, occurrence. Like we had all these points, right? Right over here. Occurrence, completeness, accuracy, classification. So how are we going to go by the control objective and activity in each of these cases? So while we look at occurrence, because we told these are the internal control audit objectives, but how will it be served? Occurrence is management authorizes all expenditures. So that means it happens frequently. It doesn't happen, like there are even cases where they give a threshold limit above which if an expenditure is made, an approval needs to be obtained. Either it could be personally you go and get the approval, or it is in the system which will immediately shoot up a pop-up for authorization. And only when it is approved, you can do it in the system. So occurrence is how often or what kind of expenditures need to be authorized by the management. Completeness. So authorization are recorded in appropriate fashion. That is not that every time it is different. You have a uniformity and completeness, that is end-to-end process of authorization. That will help you to prevent any unauthorized transactions being done. Accuracy. Authorizations are stated in correct amounts throughout the financial statements. Accuracy. Classification. Authorized expenditures are classified according to established guidelines. So basically this is our compliance. Timing. So whether these authorizations are dated, recorded on the correct dates is very important. Reporting and summarizations. So authorizations are documented in appropriate reports and include a summary of each transaction. So this is how usually in ERP system all these things are already there. Okay, if it is a robust and if it's a big ERP system, everything is automated. But when it comes to small systems, right, where it has few functionalities, sometimes customization can be done, but sometimes it needs to be manually done. So all these points should be borne in the mind, like occurrence, completeness, accuracy, classification, timing, reporting and authorization, summarization. So this is a good example on it. So let's look into the scope of internal control. So what is the scope of internal control? So first comes the administrative control. Administrative is basically, when you look at the organization's chart, right? So you come to know what kind of managerial controls are there in place, who is authorized to take decisions, and how these decisions flow down, or that is top to down approach. How does it happen? For example, in case of maintenance of records, okay, giving details of customers contacted by the salesman. Then operational control. So this is how do you do with the operations? That is budgetary control, standard costing. So we do standard setting activity. So all these are operational control, wherein you check back your actuals with the budgeted or actual cost with the standard cost and try to report on the variances or deviations. So that is at the operational level, which is called operational control. Then we have financial and accounting control. So primarily the management plans, objectives and procedures are concerned with safeguarding the assets, prevention and detection of fraud and error, accuracy and completeness of accounting records, as well as timely preparation of financial information. So all this fall under financial and accounting control. When it comes to compliance, whatever rules and regulations which are applicable, whether they are complied with or not. So these are the four types of control that comes under the scope of internal control. So as such, according to the organization, it keeps varying. So it depends upon few things like what is the type of business, whether it is a manufacturing concern, whether it is a trading or whether it is a service industry. Accordingly, the internal control will be tailored. Then coming to magnitude of business, whether it is large scale, small scale or even medium scale or micro. Infrastructure available in the organization. This is very important as far as, large organizations do have a robust system in place because it is affordable for them to have a good ERP system in place. But for the smaller organizations, right, it becomes a costlier affair to have implementation of ERP system which is conclusive in nature, conclusive and inclusive in nature, then potentiality of the human resources and their outlook. So all these things have bearing impact on the internal control structure. Then segregation and rotation of duties is very, very important because as far as organizational, that is administrative control is concerned, right? Who is authorized to do something in an organization? What are his duties? How far he is responsible? His accountability. So that is very, very important. There should not be, that is proper segregation of duties. There should be clarity of segregation of duties. Okay, so then this is one thing. So these are the factors. The first one is segregation of duties. Then if we move on, we have competence and integrity of people. That is competent. Competent here, when we talk about internal control and when we talk about transparency, accountability and stuff, it is very difficult. It is appropriate to have honest people who perform consistently. That is very important. So this basically depends upon the people you have in place. People, their integrity is very, very important. So even if you have internal controls in place, but people who are engaged in it are not honest enough, right? So think about what will happen to the internal control. It will fail. Then appropriate levels of authority. So authority and responsibility should go hand in hand. So for example, cost reduction. Okay. So controls to be effective require the authority to be granted on a need to have basis only. If there is no need for a particular person to have a specific authority, then that should not be granted at all. Because what will happen? You will have a chaotic thing wherein there are too many people who are having the authority to do something. Then comes accountability. When we talk about authority, responsibility, accountability is another leg. So it is important, the decisions taken and there are controls present and which allow the determination with acceptable level of confidence of a person to take a particular decision or authorizing a particular transaction, because he will be accountable for the authorization that he or she has done. So it is very important to concentrate on accountability also. Then coming to adequate resources, like there should be enough manpower, finance, equipment, methodologies, okay. So there should be adequate resources of this. Inadequacy will lead to failure of internal control. Then coming to supervision and periodical updation. So sometimes what happens, once the internal controls are implemented, it should be constantly reviewed. It should be periodically updated according to the requirement of the situation or according to the circumstance. So that also is important. Then limitations of internal control is, though we tell about all these things, the scope and other things, but still we have human factor who are involved in it. So there cannot be like no errors. If everything is automated, we could say that there are no errors. But if there is human involvement at some places, then there could be a misleading thing that can happen. For example, a disaster may have a low probability, but it has a very high cost. Therefore, management should employ insurance or backup plan as an appropriate control activity. So this model requires management to identify what needs protecting, what are the risks of those assets, and the level of cost impact and probability for each risk. So that is what is called risk assessments. So what can go wrong in the system? How often or what is the probability of that particular failure or risk to happen? And the associated steps that the management should take in place to control the situation. So this is basically the assessment of risk. Okay. So if we look into evaluation of internal control, this is very important because many a times they have asked this question in the exam. So what is this evaluation of internal control? Here we are going to go by section 177 of the Companies Act 2013. Okay, what does it state? The board of directors of every listed company and the following classes of companies as prescribed under Rule 6 of the companies, that is Meetings of Board and its Power Rules 2014, shall constitute an audit committee. So basically the questions are, when an audit committee needs to be formed, in what situations it is compulsory to have audit committee to be formed as per the Companies Act. So please do remember, it is as per section 177 of Companies Act 2013, wherein it advises to constitute an audit committee in the below cases. First, all public companies with a paid up capital of rupees 10 crores or more, all public companies having turnover of 100 crores or more, all public companies having in aggregate outstanding loans or borrowings or debentures or deposits exceeding rupees 50 crores or more. The paid up share capital or turnover or outstanding loans, borrowings, debentures or deposits, as the case may be, as existing on the date of last audited financial statement shall be taken into account for the purposes of this rule. For example, 31st March 2025 is the ending. So in 31st March 2025, if the public company is either having a paid up capital of 10 crores or more, or it is having a turnover of 100 crores or more, or it has outstanding loans, borrowings, all those long-term things exceeding rupees 50 crores or more, in that case it has to constitute an audit committee as per Rule 6 of Companies Rules 2014. So what does subsection 5 of section 177 of the Companies Act 2000 talk about? So it provides that the audit committee, these are the powers or these are the responsibilities, may call for the comments of the auditors about internal control systems, the scope of audit, including the observation of the auditors and review of financial statement before their submission to the board. So you should be very careful, like first when the audit report is done, right? It is first, before submitting it to the board, it needs to be reviewed or it needs to be presented to the audit committee if it is present there in the company. And only after their approval, it goes to the submission to the board and may also discuss any related issues with the internal and statutory auditors and the management of the company. So subsection 5 talks about when should the audit committee call for the comments. And first, the comments should be submitted to the audit committee before its submission to the board. So it should be reviewed by the audit committee. So the first point, that is section 177, states in which cases the audit committee should be constituted. Under subsection 5 of section 177 states what should the audit committee do, what are their powers, okay. Then coming to subsection 6 of 177, which provides that audit committee shall have powers to investigate any activity within its terms of reference, to seek information from any employee, to obtain outside legal or other professional advice, to secure attendance of outsiders with relevant expertise if it considers necessary. So at any point of time, it has the powers to investigate. So that is, its powers are stated in subsection 6 of section 177. Well, coming to the roles of audit committee. So what are the functions or what are the things they are involved in? First one is evaluation of internal financial control and risk management systems. That is what they may call for the comments of the auditors about internal control system. Reviewing with the management, performance of statutory and internal auditors, adequacy of the internal control system. So this talks about even a review. Then reviewing the adequacy of internal audit function, if any, including the structure of internal audit, department, staffing, seniority, okay, of the official who is heading the department, and what is their scope and frequency of internal audit. Then discussion with internal audits of any significant changes and follow up thereon. Then reviewing the findings of any internal investigations by the internal auditors into matters where there is suspected fraud or irregularity or failure of internal control system of a material nature, and reporting the matter to the board, because the first review happens with the audit committee and only then it is submitted to the board of directors. Then discussion with statutory auditors before the audit commences. So statutory auditors or the external auditors about the nature and scope of the audit, as well as post-audit discussion to ascertain any area of concern. So these are basically the functions of audit committee. So it should mandatorily review the internal audit reports relating to internal control weaknesses and the appointment, removal and terms of remuneration of the chief internal audit shall be subject to review by the audit committee. So who determines the remuneration of chief internal auditor? Like remuneration, appointment, removal is all taken care by the audit committee. So this section exclusively deals with audit committee, which is very important. Then okay. So the evaluation of internal controls, including internal accounting control, gives an opportunity to the auditor to clearer insight into the operational system and the way the organization is working in order to spot the weaknesses in the systems and procedures, both in respect of financial and operational areas of business. So basically every process should have a flow chart, and this flow chart will give you an idea where the internal controls needs to be plotted. So an internal control questionnaire is a list of systematically and logically prepared questions which are designed to find out and evaluate the effectiveness of internal control system. So it could be like the criteria for replies might be yes, no or not applicable, or where you have explanatory notes and comments. So this is nothing but a review of internal control checks that are there in the organization. So this particular section 177, please do mark it, because this is important from exam point of view. That is how, where the audit committee needs to be formed, in which situation. So you have all the thresholds, and once it is formed, what are the functions of the audit committee, what are the things that the audit committee does, right from appointment, removal and remuneration, terms of remuneration of chief internal auditor. So all these things are very, very important. Okay. Then let's move on to internal control and the auditor. Okay. Yes. So there is a committee called COSO, COSO, okay, that is Committee of Sponsoring Organization of the Tradeway Commission. It has a framework that it has proposed. It is not coming under the Indian kind of a thing, but it was jointly sponsored by Institute of Internal Auditors, the American Institute of CPAs, the Financial Executives Institute, the American Accounting Association, and the Institute of Management to provide a common, widely accepted definition of internal control and provide the framework. So we call it as COSO framework, COSO framework. So what does this framework talks about? So the COSO study actually identifies 5 interrelated components of internal control. So if there is going to be a short note on internal controls from the COSO framework, these are the 5 interrelated components that needs to be highlighted. So the 5 different internal control components are the control environment, risk assessment, control activities, information and communication, and then comes monitoring. So the underlying foundation of internal control is termed as control environment. So it is dependent on the people in an organization. So what is control environment? It is underlying foundation of internal control. So what does it have? It includes like ethical values, attributes, their competence. Okay. So all this comes under control environment. The management must assess the anticipated risk, that is the risk assessment, and devise mechanism, that is nothing but control activities to manage these risks. That is what is control activities, risk assessment. So risk assessment is assess the anticipated risk. Control activities is devise a mechanism to control or to reduce the intensity of the risk. So that is the one thing. Then comes information and communication is very important for effective control system. And monitoring, that is an ongoing process where you regularly monitor or review the internal controls in place. So it is basically internal self-assessment or an audit. So these are the 5 important components of internal control as per COSO framework. Okay. So this is the thing that you got to know. And then how an internal auditor is going to work on this. So importance of a role of an internal auditor in the context of internal control. What are the things? First, the purpose of the review of the systems of internal control is to ascertain whether the system actually provides an assurance that organization objectives and goals will be met efficiently and economically. That is the main purpose. Second one is a review for effectiveness of the system of internal control. This is in order to assess the functioning of the system. Third one is the purpose of the review for quality of performance is to ascertain whether organization's objectives and goals have been achieved. So what are the primary objectives of internal control are? It is to ensure reliability and integrity of information, compliance with plans, procedures, laws and regulation, safeguarding of assets, economical and efficient use of assets, and overall accomplishment of the enterprise objectives and goals. Okay, so these are the important role of an auditor. Okay, internal auditor. Then let's move on to operational audit and internal audit under Companies Act 2013. So here we have lot of sections which gives you certain rules and regulations that needs to be noted down, because from section references you get a lot of questions when it comes to audit related questions in the exam. Okay. So let's move on to, not the evolution and all is not required, so I'm just skipping that. Okay. So if we move on to operational audit. Yeah. So what is operational audit and internal audit under Companies Act 2013? So let's start with the rules. Okay. Rule 13 of Companies Accounts Rules 2014. What does it state? Companies who are required to appoint internal audit. So according to Rule 13 of the Companies Account Rules, in the following cases, an internal audit should be appointed. In case of every listed companies, it is always applicable. Okay. And every listed company, it is always applicable. So whatever may be their paid up capital, or whatever may be their borrowings, or whatever may be their turnover, if you are a listed company, for sure you should have an internal auditor. But if it is an unlisted public company, okay, it is unlisted, but it is a public company. In that case, what are the rules? Paid up share capital of 50 crore rupees or more during the preceding financial year. Turnover or income of 200 crore rupees or more during the preceding financial year. Or outstanding loans or borrowings from bank or public financial institutions exceeding 100 crores or more at any point of time during the financial year. At any point of time. It's not like on 31st March. At any point of time during the preceding financial year, if they have loans or borrowings from banks or public financial institution which is equal to or exceeding 100 crore rupees, then they are supposed to have internal auditors. And outstanding deposits of 25 crore rupees or more at any point of time. This any point of time is important to be noted. It doesn't say at the end of the financial year. Okay. So any point of time during the preceding financial year. So that was unlisted, but it is a public company. So what about private company? If it is a private company and if their turnover is above 200 crores, 200 or above 200 crores during the preceding financial year, or they have outstanding loans or borrowings from banks or public financial institution exceeding 100 crores or more at any point of time during the financial year. So only difference between these two are, okay, one is outstanding deposits of 25 crores, another one is of course paid up share capital, because if it's a private company, they don't have any paid up or something like that. They have the capital contributed by the individuals itself. Okay, it's not contributed by the outsiders. So provided that an existing company is covered under any of the above criteria, shall comply with the requirement of section 138 and this rule within 6 months of commencement of such section. So within 6 months, an internal auditor should be appointed. So here it is important to note how it is applicable for listed company, how it is applicable for publicly unlisted company, public company but unlisted, and what about the private companies. So these thresholds are important while we look into the appointment of internal auditor. Got it? Then. And what are the qualifications? Like internal auditor may or may not be an employee of the company. So he can also be an employee of the company. And the audit committee of the company or the board shall, in consultation with the internal auditor, formulate the scope, functioning, periodicity, methodology for conducting the internal auditor. But when we talk about an internal auditor who may not be an employee of the company, okay, like who is not inside the organization or, okay. So in that case, the same internal auditor cannot become a statutory auditor or cost auditor for the same company, because it is like he is going to evaluate his own work. This can never happen. Okay. So when you have an internal auditor who is not belonging to the organization, that is, internal auditor and an external auditor cannot be the same for an organization. So however, the rule specifies an internal auditor may or may not be the employee of the company. So he may be a CA, CMA or any other professional. Okay. So also neither the rule nor the act has specified the duties and responsibilities. So basically these duties, responsibilities, scope, functioning, everything, if there is an audit committee, then they will formulate it. If not, then the board will formulate those things. Okay. So even if the rules and act made the appointment and act made the appointment of internal auditor mandatory, the same rules and the act provides option to the companies to appoint any person as internal auditor. So anyone who has the knowledge of the organization, who has the knowledge of the audit procedures, it is enough. Okay, because it doesn't say it doesn't limit the scope to CA or CMAs, but also any other professional. So understanding the operations of the entity is the prerequisite. So it is not only prerequisite for internal audit, even for external audit, while we go, it is a prerequisite. So the definition of the internal audit clearly indicates that the internal auditor's role is to do a value addition and improvement in an organization operations. So, but still, internal auditors are not the ultimate decision makers, they are the advisory people to the management. So, their advices or suggestions should result in value addition and improve the organization operations. An unremitting commitment is elemental to a role. Got it? Next. Just a moment. Yeah. So operation audit is adopting the residuary approach. That is, auditing which goes beyond financial transactions and accounting records and examines into the operating, managerial or administrative performance of the entities. So that is why it's said to be for both financial and non-financial transactions. It's not always that financial transactions needs to be audited. We have also other non-financial transactions that also needs to be brought under the purview of internal audit. So the objective of operational audit process is to improve the way the business performs. Example, operational audit can help businesses to lower the costs, decrease the turnaround time, that is the TAT for many processes, and directly improve service delivery and customer satisfaction. So these are all non-finance in nature, but still this has an impact on the business. So whenever internal audit comes to your mind, it is not just financial transactions, but also there are non-financial aspects which has a bearing impact on the organization. Fine? So shall we take a quick break of 10 minutes? Yes, and get back to few more concepts. I just want to finish off this operational audit stuff today, and then so that we can move on to management audit. Okay? So let's take a quick break of 10 minutes. So let's meet at 7:42. I'll just mute myself till then. Yes, are you all back from the break? Yes, are you all back from the break? So shall we continue? Maybe I am not able to hear Rakesh. Yes. So will we come to the operational audit. So something beyond compliance is what is operational audit. So what are the things that it does? There are different approaches to operational audit, which is very well illustrated in this table. So we have active approach, passive approach. So anything compliance, beyond compliance is what is performance, operation management. So if you look at prevention, that is active. Passive is detection, that is after something occurs, you work on it. Similarly, for the prevention, we do solutions, and detection and prevention later on as part of business performance, that is how you bring in the best practices in the organization. So when you look at prevention of wasteful activities, so if we prevent that, automatically the TAT, that is the turnaround time, will be reduced, which will reduce the number of hours of process. Actively promoting compliance with internal control. So when you have internal control going hand in hand with the operations, okay, it should not be a post-mortem of transactions, let it be finance or non-finance transaction. It should not be a post-mortem. It should go like each and every step or process is carried out in an organization should have inbuilt internal control checks to do so. So in that case, many errors, frauds, mistakes, everything can be actually prevented. So that is the prevention mode. So what will be the outcome of this? One is revenue leakages will be reduced. So wherever there is revenue leakages, it will be reduced, and then there will be a lot of cost savings. Coming to the passive approach is detection, that is to identify a problem, that is after it occurs. And if you try to prevent it, at the prevention stage what happens? You try to benchmark the performance of operating processes against the best practices. So when we look at operational audit, what does it say? It is for a paradigm shift to beyond compliance. So something beyond compliance is what is operational audit. So when we look at operational audit objective, that is called Deming, D-E-M-I-N-G, which you can easily remember. Okay, so we have always heard the term of total quality management and all. Okay, so this was given by Deming. So this is interesting. So when we look at D, D stands for detailed understanding for existing process to suggest improvement. So only when one end-to-end process is known, we can suggest improvements. That is why process charts and other things are part of audit compliances. As we discussed last session, though it seems to be boring documenting everything, right? But that gives a holistic approach, right, from the beginning of the process till the end. The end-to-end view is very, very important in order to suggest or bring in any improvements. Then what does E stand for? E is for eliminate waste. That is the activity that's not going to have any value add-on, but still it exists. Then duplication of work. If the same thing is being done by too many people, so then this wasteful elimination of wasteful activity and duplication of work will actually bring down the turnaround time. Then M stands for merge of operations or process to reduce TAT, I is to improve or increase the quality, volume, revenue, that is for the improvement. N is for new methods, techniques, devices for better results or throughput. And G is for govern man, machine, methods and money. So this is a really good definition of operational audit. So you can elucidate your answer with such things because it is much easier to remember as well as it makes sense. So here if you see, it really goes beyond the compliance. What you have to comply with is something what is there, it is existing. But what change you are going to bring in? What is that going to improve? How is that going to improve the process? Reduce the turnaround time, reduce the wastage, improve the quality, okay? All these things form part of operational audit. So this way it is different from the normal internal audit. Okay, I think, yeah. Fine. So advantages and disadvantages. One thing, disadvantage is always whenever you try to implement new methods, techniques and devices, right? Always there will be resistance to change. This is one big issue wherever we come across, okay? Let it be any change, that will be, always there will be resistance to change, which is the mental fear. So it is the only disadvantage in organizational culture. So people just don't accept it as it is, as it comes to them, okay? It takes some time. So the following are the important steps as part of operational audit. So what are the important steps? First one, defining the scope of audit work. That is, what are all the operations covered? What is the scope for the same? Is very, very important before you take up any kind of an audit. Let it be internal audit, let it be cost audit, any kind of an audit. Scope of audit work should be defined so that you are not involved in any wasteful activity which doesn't add value at all, or you are not appointed for that sake. So you do something without charging them. It's like that. Then obtaining knowledge of the business processes and formulating the audit program. So it is the same as what we saw in cost audit, and it's the same as well as in management audit, which we will be covering it up in next week. Then evaluation of already existing accounting and internal control system. Evaluation is important to know what is there in place. Then determining the nature, timing and extent of audit procedures, keeping in mind the audit risk and materiality versus involvement. Adequate documentation is necessary for all these things. So that is what we call it as audit notebook, audit working paper. So nowadays we have all the soft copies which is easy to maintain, do the comparison, okay. Then formulation of opinion based on what is there and what should be there, and issuance of audit report. So the necessary evidences, how it can be. So electronic data processing for understanding the gaps, process flow charting, discussion for clarity. So once we do the flow chart and once we understand the gaps, we get in touch with the experts who actually, the subject matter experts in the organization, and we try to take the clarity, like the way we have understood, is that the same or it is something different. So what is an audit program? So this is something universal for any kind of an audit. So it is a detailed plan of the auditing work to be performed, specifying the procedures to be followed in verification of each item and the financial statement and the estimated time required. This is very, very important. The time within which the audit needs to be completed. It cannot go on continuously or extensively for a period of time, or else it will not have a bearing impact. So to be more comprehensive, it is a written plan containing the exact details with regard to the conduct of a particular audit. So it is a description on the memorandum of the work to be done during an audit. So this is what is audit program. Advantages and disadvantages, you can just go through it, it's very easy. Then coming to continuous and final audit, this is important. So when we talk about continuous audit, is something that happens at regular intervals. So like fortnightly, monthly, weekly, okay. And it is one which is commenced and carried on before the close of the financial year. So why? Because you need not wait till the end of the financial year to make some corrections. You have to regularly do this audit before something crops up in the next quarter. So it involves constant engagement of auditor staff at the client office throughout the period under review. So that is why big organizations have their separate internal audit team. They actually work on these things continuously. So continuous audit is suitable in cases where the final accounts are decided to be presented soon after the close of the financial audit or financial year, or there is a great volume of transactions, or the system of internal check is weak. Then we come to final audit. So final audit is actually a completed audit or a periodical audit, especially it happens after the close of the financial year. So that is accounts are freezed, they call it as frozen in the system. And in this type of audit, the client gives the possession of the books of accounts to the auditor for the audit, and routine checking and other audit procedures begin. So final audit is different, continuous audit is different. So you saw the audit program, but what are these audit working papers? This is basically the plan that you jot out, the evidence that you gather, all this form part of audit working papers, which we have already seen in our cost audit. So what does it constitute? Okay, so one is nature of engagement, form of audit report, nature and complexity of client's business. Okay, so these are all the things that will affect the working papers, because the working papers will not be universal or same across each and every kind of an organization. Within the same industry also it may be different, because it could be the scale of operations, it could be the integrity, I mean how the ERP is there, how robust it is, how controls are in place. All these things you got to consider, and accordingly the working papers will be determined. So what happens to these working papers? Working papers are nothing but your documentation. It serves basically three main purposes. One is, how do you plan and perform your audit is very important, and it helps in supervising and review of the audit work. And this also serves as an evidence, because if you are going to give some numbers, give some report, there should be a backup for the same. Like on what basis you have arrived at that particular suggestion, right? Important. Then we come to types of working paper files. So we have permanent audit file and current audit file. Permanent one or the legal ones like memorandum of association, articles of association in case of companies. Then some legal documents, agreements, contracts, minutes of the meeting. Then the record if study and evaluation of internal control has happened. Analysis of significant ratios and trends. These are all permanent audit files. But when we come to current audit file, is according to the situation or according to the requirement, you might be asking for certain information, like copies of management letters, analysis of some transactions and balances, doing an audit program, so depending upon what it requires, conclusions reached on significant aspects of audit, then correspondence relating to acceptance of annual reappointment. These are all current audit file. That is, it keeps changing. It's not the same every time. But permanent audit file is almost the same. There is no change. Okay. Then we have audit notebook. So nowadays we don't have this audit notebook and all. It is a permanent record of the auditor. So for each individual audit, so we actually maintain it on a electronic basis. We don't in a soft, like we use the soft copies. Alright. So in case of City Equitable Fire Insurance Company, the auditors were relieved because they have maintained record of the audit work performed at each stage. So audit notebook is also important. So what are the contents of audit notebook? So if you see audit working papers, audit notebook, audit program, all sounds similar, but they are different in few aspects. So when it comes to short notes, right, if they ask about this, you should be able to write a note on this. So when it comes to audit notebook, what are all the contents of the audit notebook? First one is the name of the business enterprise, the organization structure, the important provisions of MOA and AOA, that is Memorandum and Articles of Associations, communications with the previous auditor, if any, list of books of accounts maintained by the enterprise. So we say even chart of accounts, accounting methods, internal control systems followed by the enterprise, applicable laws, who are the key management personnel, errors and frauds which were discovered, and matters requiring explanations or clarifications. So that could be the area of doubt, and special points that need attention in the audit report and for subsequent audits. So all these are the contents of audit notebook. So they have given the specimen of this, which you can just like that go through it. Okay. Then we move on to audit engagement letter. That is how an auditor is appointed. Okay, the letter is usually addressed to the chairman of the audit committee, with a copy being sent to the audit committee, is to minimize any possible misunderstanding concerning the scope and terms of audit engagement. So this happens before an appointment of the auditor. So after, as soon as the auditor is appointed, his audit engagement is also given to him. Okay, so you can see here. So for example, this could be the content of your audit engagement. This is what is audit engagement letter. Role of CMAs in internal audit and operational audit. Internal audit is as part of the company. You may be or may not be an employee of the company. But internal audit is different and operational audit is different, because operational audit is much beyond the compliance. Fine. So while we look at internal audit and operational audit, just this is enough to go through. See, just a moment. Yeah. So when it comes to internal audit, the compliance objective. So internal audit is something wherein we focus on optimizing the risk, cost and value. So financial account focus is more in case of internal audit. Audit focus, transaction based, policies and procedure focus, cost center wise budget monitoring. So these are something part of internal audit. When it goes to operational audit, as we have seen the table, right, it goes beyond this. What they do risk assessment. They implement process improvements. They try to focus on the business actually, overall. It's not just transaction level, or it's not just financial level, financial transaction level. So how we could improve the efficiency. So here basically operational audit has a wider scope and a strategic impact when compared to internal audit. Fine. So only when we are given an audit task, right, always we should know whether the purpose of what is the purpose of us being appointed as an auditor. Is that just internal auditor to check the transaction level things, or it is beyond that, such as operational audit? So only when we know the difference between the two, we will have the clarity as an auditor. From where do we have to start moving the coins? So basically, if you look at operational audit, here we do planning, organizing, directing, controlling, everything happens. All the management functions are there. We do a bit of forecasting, production scheduling can also happen. So there are, the scope is much wider when you look at operational audit when compared to internal audit. Fine. Next. So this is the difference between these two, internal audit and operational audit. Then let's move on to internal audit under Companies Act 2013. So here once again we have a section 138. Compulsory requirement for appointment of internal auditor. So this is what we have already seen before, which talks about appointment of internal audit. So that was for, so if you see Rule 13 of Companies Act. So Rule 13 of Section 138. Okay, Section 138 along with Rule 13. So this we have already gone through. And the Constitution of Audit Committee. What are the requirements? So that also we have gone through. So those are all some important sections that you got to remember. So it's the repetition once again. Yeah. So this is one form that is filed with the Registrar of Companies on appointment of the internal audit. So what is that form called? Form MGT 14. So the appointment of internal audit can be done only by means of resolution passed at the meeting of the board. So everywhere the minutes of the meeting of the board resolution becomes the evidence for the same. So as specified under the Rule 8 of Companies Meeting of Boards and its Power Rules 2014, and accordingly the company is required to file Form MGT 14 with the registrar within 30 days from the date of passing of resolution. However, the filing of resolution has been exempted for private companies via Ministry of Corporate Affairs notification. However, the private company is still required to comply the requirements of Section 179. So this is one of the things that is within the appointment, within the resolution. 30 days within the resolution has been passed. It needs to be filed in the form MGT 14. Who has the authority to appoint the internal auditors? So where the companies are to compulsorily they have their audit committees, usually audit committees have the authorities to do so. So Rule 13.2 of Companies Rule 2014 set forth that audit committee of the company or the board shall in consultation with the internal auditor may formulate the scope, functioning, periodicity and methodology for conducting the internal auditor. Statutory auditors cannot be appointed as internal auditors. So that is what I already mentioned. So this is as per, see, whereas the statutory auditor is appointed by the company in accordance with the provisions of Section 224. Okay, and he is supposed to perform under Section 227. So he cannot be taken along with the internal auditor. So internal auditor and the statutory auditor should be two different people. Formation of policy and procedure for appointment of internal auditor. The company's accounts rules 2014 provides that the audit committee of the company or the board in consultation with the internal auditor may do so. Okay. Existing companies need to appoint the internal auditors within a period of 6 months, that is before 30th September. That is from this close of. Okay, scope of internal audit that we already know. Okay, and this scope needs to be discussed before. That is what is given under in audit engagement letter. Well, we come to powers and duties of internal auditor. So there is no powers or duties which is prescribed by the Act, but it is governed by the appointment of internal auditor, which may be decided mutually between the company and the internal auditor. So they will jot down, define the scope of the engagement. Punishment and compound ability. So this punishment penal section is also important. There are no specific penal provisions provided in Section 138. Therefore, penal provisions under Section 450 would apply in case of any non-compliance of this section. Accordingly, for contravention, the company and every officer of the company who is in default shall be punishable with a fine of rupees 10,000. In case of continuing contravention of that thing, it will be further fine of 1,000 rupees per day of delay. So the offences under these sections are compoundable under Section 441 of the Act. So this is the penalty that is attached to. Fine. Next comes internal audit and company's auditor's report order. that is called CARO, C-A-R-O. Okay. So this is full of internal control stuff. Okay. So if we look at CARO 2020, okay, so this is class 14, spells out the requirements as to reporting by the statutory auditors on the internal control system and internal audit system respectively. Each of these clauses is discussed below. This is entirely CARO 2020 clause 14. So whether the company has an internal audit which is enough or commensurate with the size and nature of the business. Whether the reports of the internal audits for the period under audit were considered by the statutory auditor, because statutory auditor is different from an internal auditor. When it comes to internal control system, okay, so as per SA 200, internal control system refers to all policies and procedures adopted by the management of the entity to assist in achieving the management's objective, ensuring the orderly and efficient conducting the business. And to what extent is the reporting? So if we see the extent of reporting, the internal audit functions constitute a separate component of internal control with the objective of determining whether other internal controls are well designed and properly evaluated. So for example, if we look at internal control system as far as purchase of inventory or fixed assets, sale of goods and services, it does not anyway reduces the responsibility of the auditor to examine other areas. So it's not limited. He is supposed to do whichever, whatever is important, all those functions he got to do the audit and report. So that is very important. Major weakness. The order does not define as to what constitute major weakness. The order in the sense, the CARO 2020. Thus it may be interpreted that major weakness depends upon the facts and circumstances of each case. So what is the financial impact? Or in what way it is going to put the enterprise under the risk? So all these are very, very important to comment on as major weakness. Adequacy of internal control. So as per SA 200, with SA 315, the auditor should obtain an understanding of the accounting system sufficient to identify and understand the major classes of transactions. So we may be financially knowing the impact, which way the entries are passed, right? But the ledger accounts that it's going to hit, or the ways or norms, principles that are followed in accounting in a particular organization, that information should also be understood properly before even commenting on the accounting system. So significant accounting records, supporting documents and specific accounts in the financial statements and financial reporting processes. So what are the things that we are going to do under that? First one is providing the flow work through various stages. Always process flow is very, very important. And there should be proper segregation of duties so that no single person can be in a position to handle the entire work, that is the end-to-end work. An adequate documentation should be maintained at each stage of work, and the transactions that are recorded with appropriate amounts and in timely manner, and that too as per the applicable accounting policies and practices. The assets should be properly safeguarded, so it is a universal point everywhere. The access to the assets should be restricted and it should be only for the authorized personals. Existence of organization chart, yes, like we take chart of accounts, similarly organization structure also plays an important role, because that will help us to understand the segregation between duties and responsibilities at each stage. Then standardized records and format should be evolved. It would ensure availability of right information at the right time. And there should be an efficient MIS, that is Management Information System. Minimization of losses and wastages, and employees should be encouraged to do good work and comply with the procedures. An adequate cutoff procedure should be formulated so that the transactions of one period can be separated from the transactions of other period. So these are the basic things which comes under adequacy of internal controls. Then continuing failure. What means continuing failure? So it again depends upon, there is no specific definition, but it depends upon the facts and circumstances of each case. For example, if the auditor has identified in the previous year, okay, and reported the same to the management, but what happens, that continues to stay in the current year also. So that means it is a continuous failure. That is, this has not been looked up by the management. They have just reviewed it, they have signed it, that's all, and they have not taken any actions to correct your comments. So this is one of the major weaknesses. So sometimes what happens is, just for compliance sake the audit happens. You submit the reports, you file it with MCA, everything is done, but no proper actions are taken based on the suggestions or the reports that have been put forth. So that is something, it is not going to solve the purpose of audit at all, okay. And checklist and specimen reporting. So these are all forming part of your internal control system. So checklist and specimen reporting. So on the basis of understanding, documentation of whatever we have done before, right? So how we are going to prepare a checklist for each of the thing. If not, the document the inadequacies and weaknesses should be reported. Review the reports of internal audit, and in case of continuing failure to correct any major weaknesses identified, we got to report the weaknesses, and we also have to highlight the steps that will be taken by the management to correct such weaknesses, okay. But who is under the purview, or for whom this CARO 2020 is applicable? So Ministry of Corporate Affairs, that is MCA, has deferred the applicability of CIRO 2020 from the financial year commencing from 1st April 21 instead of 1st April 2020. This is because of that COVID-19. So what is the applicability? So it is applicable to all companies, including any foreign company, except for the following. First one person company as defined in clause 62 of section 2 of the Companies Act 2013. Second, small companies, wherein the companies which have paid up capital less than or equal to 50 lakhs or with last turnover less than or equal to 2 crore rupees. Banking companies, because they are covered under Banking Regulation Act 1949. Insurance company, because they are covered under Insurance Act 1938. Companies registered for charitable purposes, they are also outside the purview. And private companies with gross receipts or revenue of more than rupees 10 crores as per financial statement during the last financial year. So it is all applicable, not applicable for these companies. Then private companies with paid up share capital, reserves and surplus not more than 1 crore as on balance sheet date. During the financial year as on the balance sheet date makes a lot of difference. A private company that is not a holding or subsidiary of a public company, a private company that does not have total borrowings of more than 1 crore from any financial institution, including banks, at any point in time during the financial year. So if this is the case, these companies are outside the purview of CARO report. Okay, this is what MCA has defined. Got it? So then we have a really interesting stuff on internal audit for manufacturing sector, which is really that we do practically, we see practically. So when it comes to manufacturing sector, right? What are all the things? What are the list of controls? So list of controls is listed out based on the risk that is being taken. So when you come to manufacturing companies, right? So like for example, if we go for production planning. So production planning, what can go wrong? That is what is the risk associated. So it could be untimely production as compared to the marketing requirements, so which may result in holding of inventory. So what should you do for that? You should see proper EOQ is calculated, authority level for review and modification in the production plan is sorted out, timely compilation of production budget or plan for each of the product is done. So all these things will help you to overcome this risk. Or there is an excess or short of production as compared to the plan, or loss of production due to non-consideration of sales forecast or raw materials availability. So these are all the risks associated with production planning, and these are all the list of controls that can take care of. Similarly, consumption standards or norms and actual consumption. That is excess production cost. When you are not able to, whatever is the estimated raw material consumption, if it is more than that, if the utilities you have used more than that, so that will result in excess production cost. So what are all the things that can be a part of internal control? So first of all, it's a manufacturing plan, manufacturing kind of an organization. So when it comes to manufacture of a final product, the final product will always have BOM, that is bill of materials, which will list down all the components that are part and parcel of a particular final product. So this BOM needs to be structure-wise given so that it's very easy to locate actually where the variances has happened, whether it is in case of quantity of raw material consumption or whether it is in case of price. If it is quantity, then it is a usage variance. If it is based on the price, then it is a price variance. So this should be already present in the organization for each of the final products that a manufacturing company produces. So this is one of the internal control. Then periodic comparison of actual capacity utilization. So we have already seen what is the normal capacity, what is actual capacity, what is authorized capacity and stuff. So all these things should come in place. Then review of periodicity of comparison of actual consumption and the standard consumption. So in some places they go by quarterly reviews because that is more effective instead of waiting for the yearly one. Identification of controllable and non-controllable factors that are resulting in variation in the consumption norms. Okay, like controllable factors which is within our things. Non-controllable, for example, if there is a power outage, what can you do? You cannot do anything except for that you have a backup for that. Okay, so that is non-controllable, which is outside the hands of the management. Verification of overall material reconciliation, highlighting the total material consumed, standard input-output norms, and the actual. So this we do a lot of things in our standard costing, if you remember how we do, right? All that forms part of your internal control. Then comes capacity utilization. So there is an operational loss. It could be due to inadequate capacity utilization, or there could be excessive utilization, or there could be interruption in the production process. So always there should be a periodic comparison of actual capacity utilization, which should be synchronized with the sales plan. Okay, because once the forecast from the sales department is obtained, based on that the production actually goes on. Because if we don't sync these two, sales with that of the production, what will happen? Either you end up in shortage of inventory or you will have excess of inventory. So how it is linked and synced is very, very important. Then coming to documentation and record maintenance. What can go wrong with that? Inadequate document of production data results, because you need a data, accurate data to come to a conclusion what has happened, what has gone wrong or what needs to be improved and stuff. So documentation is very, very important. Then coming to ambiguous authority levels or access for generation of production documentation, resulting in unauthenticated generation of production data. So how can this be checked? If we have compilation of daily production report from the DCS and its validation by the authorized person. DCS is like any ERP system, periodic review of conformance with ISO requirement, predefined authority levels to generate, add, modify production data in SAP or DCS. Then coming to quality control and inspection report. So what can go wrong? Either there is no quality control at all, that is complete absence. So these are all the things we actually check in all the departments. It's not just one finance department we go and check it. Okay, we have to do at the overall level. So absence of standard quality control parameters resulting in substandard production. Sometimes it may result in scrap or high rework cost. So this is also one of the reasons. So before something happens, goes wrong, so there should be SOPs, that is standard operating procedures for quality control and inspection. So SOP is the basic document that we require. And review of the quality control norms, that needs to be periodically done. And adherence to the predetermined sampling techniques, because one by one we cannot do it. How far the samples are properly chosen and what is the area for that. Review of complaints received by the production department pertaining to quality or quantity of cement sold in the market or lying at the godowns. Okay, customer complaints closed in time. And engagement of external agencies. Sometimes we may not have our own quality control team, we will also engage the agents. That can also happen. The process of reworking quality control failed products. It is one thing that is going to increase your cost of production as against the number of units produced. So we should be very careful about whether a rework needs to be done or not. All products are bagged after the same being qualified for or passed by QC, and variations over standard bag consumption is measured and monitored. Then coming to review of process losses and cycling. So that is, we are not recycling the losses. Inadequate recycling of materials is happening. So what do we have to do? We should have a system in place to take care of abnormal process losses. How it needs to be recycled. What are the procedures in place? And prepare the comparative analysis always helps you when it goes with comparing the process losses in the current year with that of the previous year, or how the trend has been according to the total production. So what is the percentage of process losses to that of the total production? So these are all some important internal control points. Preventive and breakdown maintenance. This is one important thing that happens in manufacturing companies. So either there is a plant shutdown, or there is a loss of production, or there is some bottleneck in the company which actually puts the process, okay, and what is the impact of breakdown maintenance on the production schedule. All these are very important internal control checks. Then coming to MIS reports, that is Management Information System reports. So inadequate MIS reports resulting in unauthenticated and unreliable production details, which is resulting in improper decision. That can also be the thing. That is, reporting is also important. See, the decisions are basically taken based on the reports that are generated. So if there is falsification of the reports, then think about generation, think about the decisions that are based on that. Obviously that will go for wrong. So that is why MIS reports, compilation of those reports from the source data and their approval by the authorized person is very, very important. Like even in companies, right, when we do the reports, it's not just like that we submit it to the management. There are levels of checking which is done, and the authenticity of the reports are verified, and only then it is presented to the management. So these are all small things that are the internal control. Then coming to deployment of workmen on contractual basis. Okay, so if it is contractual basis, what are the agreed upon contracts? What are the skill set? And what is your requisition? Because in case of seasonal industry, according to the demand will be your production. and according to the production, the manpower will be planned. So it's not necessary like last year if I have taken so many people on contract basis, it should be the same numbers. It can go up or down according to the requirement. And what is the skill set required? So all these things are taken care under workmen, like deployment of workmen on contractual basis. Fine. So likewise we have for fixed assets also. Okay, and safety requirements, valuation of assets, sale of assets. So under assets we have all these things, fixed assets. Then we have capital work in progress, capital advance. So for each and everything there are internal control in place. So first we have to know the function. Like for example, if it is a purchase department, we should know how a PO, right from the generation of PO, how does it happen? What are the levels that happens and how this PO is generated and how till it needs to be compared with the receipt of goods. So all these things, understanding each and every department and each and every process under each of the functions is very, very important before putting any internal control in place. So that is what has been illustrated in the rest of the chapter. Okay. So I would like to wind up the session over here because it will be too much of theory for today. So we will continue the rest like fixed assets, then capital advances. Okay, so these are all important concepts that we will cover up in our next session and then quickly move on to management audit. Fine. So that's all from my side for today. Good night and have a good evening. Yeah. Thank you all.